What's up, guys? Welcome to the Crypto Savvy Show. I am Craig, and we're going to be going over the charts. I know a lot of people lately are talking about the weekly RSI being lower than it's ever been. But wait a minute, I'm going to show you something that shows when a market matures, we need to start looking at other things. We're going to get into it. Let's go. So the Dow futures as of right now are up 103. S&P's up 20. And NASDAQ's up 85 for the pre-markets. As you guys know, they can be green in the pre-markets and then dump. We're going to take a look at the charts, take a look at our targets, our resistance, our support, everything we've been looking at. What I think is a possibility here, now this is not a guarantee, but it is possible that we could be seeing something like the Great Depression right over here. The patterns in the chart are looking almost identical. So that's something you need to be aware of and be scared a little bit just in case it happens. I'm not trying to put FUD out there. I'm trying to put out what I'm seeing in the charts. And as you guys know, and mind you, remember guys, none of this is financial advice. I'm showing you my ideas and my opinions. So anyways, if this was to play out, this could take another year or two before it would bottom. Now, everybody's always talks about, we're going to talk about it a little bit later too, but everybody always talks about just dollar cost average. Well, if you would a dollar cost average in this whole thing, it took, let's see, the top was in 29 and it took till 55 to break that. So around 25 years, is that? Yeah, around 26 years it took before it broke that. It's not to say that's going to happen again, but just so you know, markets don't always just recover fast. But who made the real money were the people that bought down in these levels, because it took, let's see, before it stayed above the midsection was about 15 years. So this doesn't have to happen quick like everybody thinks. So just be cautious, be careful. Let's take a look at the daily. So on the daily, as you guys know, our resistance, we've been talking about this forever since it was our target. Usually when our measured move targets get hit, you can see we had the bounce, came back up. Now we're below it. That becomes resistance. We had this measured move since back in January. So if this is to play out like I'm expecting, unless we open and close one daily candle above this 30,700, I think we remain bearish here. Now, our target for falling out of this falling wedge on the Dow is around 2581. That would be my next point of support if we do have another crash down, get a bounce, maybe as high as back up to the 30,000 range, and then continue back down if we're in the longer term bear market. Now, let's take a look at the DXY. So the DXY, we have been playing around our target of this 104.29, which is major support. It should be major support here. If we do get our bounce and we break this 105.6 range, then you guys know I've been very bullish on the DXY for quite some time now. If we look at the monthly chart on the DXY, it had broken out of a falling wedge way back here. And if you guys were around, I was bullish when we, right around in here, when we came down and retested this at the beginning of 2021. Everybody called me crazy, but as you can see, it's been rising ever since. If this was to happen in the next, 10 years, possibly less, who knows? But anyways, that's the measured move target for the DXY 172. Obviously, shorter term time frames, we got around 120 if we break that 105 range. So, but again, this takes time. This is a monthly chart. Each candle is 1 month. Now, the Amazon to Bitcoin comparison chart. This is where it all begins, other than the Great Depression model I just showed you. We've been watching this since December 2nd. You can go on my YouTube, open my YouTube channel, and it's the video playing right there. It was posted on December 2nd when I started showing this chart. And I had told you in the video that give it some time and then everybody would be copying it. That's why I wanted to get the video out that day. And that's exactly what's happening now. But anyways, so if we look at what's going on, you can see on the weekly chart, we came up for possible wave 2. going down for wave 3, 4, and 5. And if that does play out, my worst case scenario is around 3,700, but I'm going to show you some other targets today also. Like you guys know, I do believe we see bottom sometime in 2023 between 3,000 and 7,000, unless this gets invalidated. If it gets invalidated, I will let you know. First point of invalidation as of right now is around this 32 to 33,000. If it gets above that, this chart will be invalidated. We're going to go into the smaller time frames. Also, I want to show you some stuff. This is the weekly time frame. Remember, we were bearish when we had our cross of the 8, 13, and 21 EMA cross the 55 right here. That is a weekly sell signal. And I had told you if we broke down from that 34.6 range, it was going to get ugly. It got ugly. Now, our point of resistance right now is around 26.8 on the weekly. All right. That's the 55 or the 200 EMA right here. Also the 8 EMA. So that's our major point of resistance if we can even get up to those levels. This is what everyone's talking about. The lowest the RSI has ever been on the weekly. Well, the fact is Bitcoin's been around for a lot longer now. We can switch over to the monthly and look at that RSI, right? We do that. We have plenty more room for the downside. As I showed you guys, this major bearish divergence we had here. Again, Bitcoin has matured. Look at the bigger time frames to kind of see what's going on. So on the monthly, our resistance is around that 24.5 range, 24.2, 24.5. That's very important when we get into the smaller time frames. But as you can see, the RSI is a lot further to go. We're going to take another look at some RSI things. This is the Amazon chart. This was the Amazon RSI from the high down to the low here. You can see this was around, actually, it's down a little bit. It's right around 96 on the RSI when it topped over here. Went all the way down to 34.57. And you can see all the hidden bearish, or I'm sorry, people are talking about hidden bullish divergence because we're making lower lows. You can see it did it back here too, which meant absolutely nothing. We continue back down all the way down to that 34.50 range. If that was to happen again, now I'm going to click over to the Bitcoin chart and you'll see the resemblance right here. If we were to do that, which I think it'll be in sometime 2023, that would be where we went. You can see it didn't get quite as high here. Went to around the 92 range when it topped out. Still, nevertheless, same type thing. Just what I'm trying to show you is we have plenty more possibility for more downside here in the longer term. As you can see, I'll click back and forth so you can see the resemblance. Almost identical, actually. So, all right, let's take a look at, this is also another long-term weekly chart. We had, remember I told you when we broke here, I believe the top was in at 64. We did get a fake out, but I did tell you that I did not think there was a possibility that we would see 100K. But anyways, and you can see what's happening now. And again, on this chart with my fib channels, the resistance is around that 24.3, 24.5 range on the weekly. So that's a very important range. We're going to look at that in smaller time frames. But before we do, if you guys are interested in trading, definitely check out Prime XBT, by far my favorite exchange. They don't trade against you like the scammy exchanges. They don't clump all your trades all together so you can have multiple trades in. You can trade Forex, gold, silver, oil, S&P, Dow Jones, crypto, everything, all from one exchange. You can even trade pre-markets on here for no extra cost. So if you use my promo code SAVVY50, that'll get you up to a $7,000 bonus. SAVVY25 will get you 25% off your trading fees. There's a link down below. Definitely check it out. And you can go to my YouTube page for a tutorial. So this is the daily chart. This is all about market structure, guys. This is how we've been looking at this and calling this so far. So after these 5 waves down, we were looking for ABC correction up. I didn't think it would go that high, but obviously it was an irregular correction. Nevertheless, we got our ABC correction before a continuation to the downside. If we take the measured move from this rising broadening wedge, this is kind of just to show you guys how I get this. So those that just watch the video and leave don't get all this info. Oh, before I go any further, make sure you guys smash those thumbs up. Leave your comments down below. and subscribe to the channel if you haven't already. If you want daily updates, make sure you tick your notification bells. That'll get you notified when I post new videos. Make sure your notifications are on. So we had the target of 24.3 from way back here in December. We hit it in June. So as you guys know, the longer the time frame, the longer the stuff takes to play out. But I had said if we break below this, that should become our new resistance. And then we could look at our lower targets. We do have a target around 6,800. But like I said, we'll go into the smaller time frames to kind of show you. I'm just showing you in the bigger way how to look for these structures and why I told you I believed it was going to continue down. Now, if we take a measured move from the break of the structure right here all the way down to the bottom, looking at this as a bear flag and this as the flag pull, and we put it down to the breakdown, that's where we get that $6,800 to $7,000 range. As you can see here on the daily, the RSI is pumping up pretty good. We're making hidden bearish divergence. Higher highs in the RSI, lower highs in the price action. Hidden divergence is a continuation of the trend. It's hidden bearish and it's in a bear trend, continuation of the trend. The trend is down. Let's take a look at the 4 hour. So on the 4 hour, we can break this down a little bit more here. As you guys know, this is the measured move right here. You know what? Let me go back to I'm getting ahead of myself here. I wanted to show you some more things. So if we took the very top of this for the flag pull instead of the break of the structure and put that down here, this gets it all the way to possibly around the 1,800. I don't think we're going to go that low. Again, my projected targets are $3,000 to $7,000 Bitcoin sometime in 2023. It doesn't mean we won't have bounces, and we'll talk about that a little bit when we go into the 4 hour here. So looking at it in the 4 hour, as you guys know, once we broke this channel, bear flag, the measured move of that hit perfectly right there around that 20-25.5 range. And then if we look at this as a flag pull from the break of this, that gets us down to our next target, 17.7. I was calling that when this broke up here at 29.9. People called me crazy, but that was my target. It did hit. We were expecting a bounce there. We got our bounce. Now, the question is, will we range around in this area? It's very good possibility we could range around in here for weeks. Once this 17.7 breaks, my next target, as you guys know, is the measured move of this bear flag. So if we break the 17.7, we break down here, start opening and closing 4 hours below here, our next target's at 6,700. And then again, like I said, we could go much lower to the $3,000, $3,500 range if this breaks. If this breaks, this should then become resistance. But this could take a lot of time. Like I said, we could range around in here for a while, but once this breaks, we'll test it for resistance and maybe a couple times. But I think eventually we come back down to our targets down here. And then we may range all the way back up here, get another big fake out before continuing down. Again, we'll be keeping up on this. So make sure you're tuned in. All right, now let's look at this in the 4 hour. So talked about this yesterday. As of right now, around that 21.5, 21.6 range would confirm a breakout. We talked about this being a possible inverse head and shoulders, being left shoulder, head, right shoulder. If that is the case, I would look for a long here if we get to that 21.6. Although I'm not convinced we're going to get there. I think we could go down from here, but let's take a look at what that measured move would be. So if we took the measured move, looking at this as an inverse head and shoulder, and we broke out here past that 21.6, then we'd be looking for the 26.3 range. If we looked at this as a broadening wedge, a falling broadening wedge, and we broke out, that could get us as high as that 28.5 to 29 range, somewhere in that area. But again, I think this major resistance here at the 24.5 would hold even if we broke out here. Then look for another retest of this trend line, and if it broke from there, maybe put in a long. But as of right now, like I said, I'm looking for around the 18.3 to 18.5 range from here. But if we come back down to test the bottom of this rising broadening wedge, I see us coming down to around the 13.2 range. Depending on if, when, and where it hits this, I'll keep you guys updated on that. But as of right now, I think there's a good chance we see, if we get a pump, I don't see it going past 24.5. I do think we're going to see this 13.1, 13.3 in the near future, in my opinion. Thanks a lot for watching, guys. Don't forget, smash those thumbs up. If I get 1,000 likes on the video, we'll do a live tonight with... Actually, I can't do a live tonight, but make sure you smash those likes. I will be on a Spaces on Twitter today. Watch my Twitter. I'll notify you guys of that. So anyways, thanks a lot for watching, guys. Don't forget, smash the likes, subscribe to the channel if you haven't already. Leave your comments down below. Are you bearish? Are you bullish? What's your next target? Let me know. I'm out.